You might be wondering why technology companies are laying off people these days. That is why everybody's scared what to expect next. No doubt there are multiple reasons behind it, like economic conditions, budget planning for next year, and last but not the least, rise in benchmark rate by the US Fed. Now, for those who are new to this channel, my name is Sunny and I make content that help a common man financially. So let's dive into today's topic, massive layoffs. Please do like, share and subscribe as that will help boost the YouTube algorithm for my channel, which of course will be highly appreciated. Like they say, layoff season has arrived. Most of the big technology companies have reported less than expected earnings over the past few weeks, which could be the warning sign about the future. Naturally, to boost their earnings, they are looking to slash their costs, and employees, which contribute a huge chunk of their budgets, are relatively easy to let go. Post pandemic, there was an exponential growth in business, which has slowed down recently because of multiple reasons like increasing rate by the Federal Reserve. All this resulted in some sort of slowdown which has already started to happen in the economy. Therefore, these layoffs are in anticipation of it to some extent. When Elon Musk took charge of Twitter, he announced massive job cuts totaling about 7,500 employees, out of which some of them were based out of Canada. He famously tweeted, and I quote, "There is no choice but to let go people as company was losing $4 million in a day," close quotes. Some experts are of the opinion as Elon overpaid for Twitter, maybe now he's trimming down costs to make his recent acquisition look more economically viable. But with other technology companies laying off its workers, now it is clearly evident that what started at Twitter is a industry-wide problem of shrinking margins and bloated workforce in the backdrop of economic slowdown that we all can see and feel. This e-commerce giant has been America's second largest private employer but recently announced around 10,000 job cuts. Amazon did hire a lot of people during pandemic when the demand peaked, but now things have dramatically changed. These layoffs did not come as a surprise to many when companies' operating margins came under pressure. Hence, these job cuts are in line with what other technology companies are doing. Out of over 1 million employees, these layoffs will affect about 10% of their workforce. They have about 25,000 employees in Canada, but right now nobody is sure how much impact all this will have on its Canadian operations. News came out that Facebook's parent company Meta is letting go about 11,000 employees, which is about 13% of its global workforce. CEO Mark Zuckerberg told its employees the rationale about trying to rein in costs so that they can maintain their margins. Having hired aggressively during pandemic when their focus was to build up their metaverse unit, which I must admit is not working according to their plans as they are losing tons of money now. The real challenge could be competition from TikTok, which is growing in popularity amongst younger audience, probably at the cost of Instagram, which Meta also owns. Online business has been the main engine of growth and income for US technology companies. Two major things have happened lately that has turned this business model upside down. Firstly, Apple made it harder to track people's online activity, which reduced quality of data these apps used to collect. If your online activity cannot be tracked across platforms, whether you are on or off a particular app, advertisers are not able to micro target their consumers with ads, which they could do earlier. Secondly, with Fed increasing interest rates, economy is slowing down, which is forcing many advertisers to slash their budgets, thus affecting revenue for these tech giants. In today's monetary tightening environment, cost of money has gone up substantially, affecting companies' profitability. Since shareholders expect a decent return on their investment, therefore big corporations are forced to find cost reductions, and laying off people is just a start in my humble opinion. There needs to be realignment of supply and demand, gap of which has widened post-pandemic when Fed rates were reduced to almost zero. With those times behind us, as rates are on the rise at a faster pace, more turmoil in stock valuations are about to be expected. Therefore, it is not a bad idea to be conservative during these tough, turbulent, and unpredictable times where cash could be the king as economy and the job market becomes tougher by the day. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor, so please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.